All right. So we are live now. So good morning, everyone, and thank you for joining us. And thank you to Lonnie for agreeing to join us and give us an update on where things are now that we're in 2021. Lonnie, thank you for joining us this morning.
Okay, thank you for having me, Nicole, and thank you, Kim and the Chamber, for keeping everyone informed on this very important subject.
Thank you. All right, so do you want to take it away? Let us know where we are in 2021.
Well, certainly. So there's a lot of new developments going on in the PPP world. So since my last presentation, it's amazing. We've had legislation. The Consolidated Appropriations Act of 2021 was signed into law December 27th. And that brought some clarity with regard to the Paycheck Protection Program with regard to deductions. Essentially, the Internal Revenue Service had come out with guidance indicating that expenses that were paid by forgiven loans would not be deductible on the tax return.
That's great news.
Income would be excluded from income, but the expenses would not be deductible, which in a way is just still having the income taxed. So thankfully in the CAA, the Consolidated Appropriations Act, that the Congress's intent was clarified and those deductions are allowable. So that was one major thing coming out of the CAA. And then soon after that, the IRS issued Revenue Ruling 2021-2, which indicated that no amount shall be included in the gross income of an eligible recipient by reason of forgiveness of indebtedness, and no deduction shall be denied, and no tax attribute shall be reduced. And also, no basis increase shall be denied by reason of an exclusion from gross income. So they really laid it out and made it very clear. They gave us in the tax world a lot of guidance with regard to how we were going to handle that. The problem is that this provision, this act, applies to federal law only, and California did not conform to the original Paycheck Protection Program additional corrections. So they did not conform to this change in the law because they have existing law which indicated that these deductions would not be deductible. So late breaking news. Just today, we received information that Governor Newsom has worked out a deal with the legislature to have a partial conformity to the CAA with regard to the deductibility of these expenses. And the agreement calls for companies to deduct up to $150,000 in expenses covered by the PPP loan. So that's not full conformity. Certainly a lot of companies received a lot higher forgiveness than $150,000, but at least that provides a little certainty with regard to the smaller companies and what they will be able to deduct. For our clients, we were suggesting to our clients that they go on extension until California had done something. There had been other legislation that was being offered for full conformity, but it looks like with this agreement with the legislature that partial conformity is probably going to pass. So stay tuned on that front and we'll see where that gets us. So with regard to the CAA, there were several other provisions, and another provision was a second bite at the apple for those employers that had taken a PPP loan in the first place and were going to use up their full PPP loan. And they were allowed to take another PPP loan if they had 300 or fewer employees and they could show that they had at least a 25% drop in gross income each quarter of 2020, or in at least one quarter of 2020 over 2019. So you had to have been affected by the pandemic, had a loss of revenue of 25% or more in a quarter, and then you were able to take this second draw. They also offered a new round for borrowers that did not participate in the first go round of the PPP. Actually, there were two levels of PPP before this. And if a company would qualify now under the old rules but did not take it, then they were allowed to take PPP loan. It's the same rules as before. I think the only major addition is that some insurances, group life, disability, and dental and vision, can be added to payroll costs. But essentially, it's the same rules as before. This new round for first-time borrowers is only available through March 31st of this year. Good news for the chambers, and I don't know if the Los Altos Chamber participated this time, but they opened up the PPP to new eligible employers, Chambers of Commerce's being one of them, which is very good for a lot of the local chambers that were shut out of the first round of the PPP loans. Some travel and media companies would also qualify. So there, certain special groups were allowed to participate in this this new round of PPP loans. They also expanded eligible expenses. And so in the first round, it was utilities, it was rent, and it was certain interest along with payroll costs. And if you couldn't qualify as a payroll cost or one of those other items, then it wasn't an allowable expense. So you couldn't base your loan on that, and you couldn't get forgiveness for those types of expenses. So they realized that there were a lot of expenses that businesses had incurred that really gave rise to the need for the PPP loan. And so they've decided to include those into costs that are eligible. And those will be costs to pay for personal protective equipment. So masks and shields and barriers and things like that would all qualify now as eligible expenses. If a business decided to have outdoor dining, any costs associated with providing the outdoor dining that was over and above what they had they normally had. Supplier costs to provide that PPP and other types of equipment, their downline suppliers. Certain software and cloud computing costs, certain HR and accounting costs, and any damages that a business incurred as a result of the social disturbances in 2020. If those costs were not covered by insurance, then those costs would also be included under the eligible costs. So those are all very good additions to the list. But remember, you have to have 60% of your expenses to be forgiven. 60% has to come from payroll costs.
Got it.
So another expansion, some people don't really realize how beneficial this is, but the original program had 2 enrollment periods. It started off an 8-week enrollment period. It got expanded so it could be a 24-week enrollment period, but the employer had to choose one or the other, either the 8-week or the 24-week, and nothing in between. And depending on when your payroll occurs or some other costs that are paid, being fixed at the 8 or the 24 was not beneficial, or at least not the most beneficial. But under the new plan, the employer can select between 8 weeks and 24 weeks. So they can choose that enrollment period that best suits their cost structure so that they can get at least 60% in payroll costs and maximize the amount of non-payroll costs in the deduction. Under this program, the CAA, there was a simplified forgiveness program of $150,000. We were hoping that was going to be $250,000. And under the original program, they came out with a form for a $50,000 simplified forgiveness application. But under the CAA, they instructed the SBA to have a $150,000 program, and so those will be rolling out shortly. So a couple of little other things that are fairly important for those employers that were able to take the employer retention credit. At one point, they could not use PPP loans for getting forgiven based on the amount that they claimed for employee retention credits, and that was done away with. So you can take the employee retention credit and get the loan forgiven. And forgiveness also is not reduced as a result of the EIDL advance. Some companies were able to get a $10,000 advance. That in the previous program was not allowed to be forgiven, but that was done away with as well. So all in all, the CAA was very favorable to businesses. In some cases, a second bite of the apple, another chance for people that didn't take advantage of it in the first place, as well as some new businesses being eligible. So that's the major thing. I think the hottest news is the news from Sacramento that the governor and the legislature have agreed, at least tentatively agreed, on some California conformity up to $150,000 of deductible expenses allowed on your California tax return. So that's all I have, Nicole. Hopefully that gives our viewers kind of a snapshot of what's going on since December of last year. And remember, see a tax professional to get assistance in doing your PPP loans, because it's more complicated now than ever.
Yeah, that's a lot of updates since December.
Absolutely, absolutely. They keep us busy.
Definitely. All right. Thank you so much for joining us, Lonnie. I know you're busy right now, but thank you for taking your time to come out and give us an update.
It's my pleasure. Thank you very much.
Thank you. All right. So I think I saw Grail join us briefly to provide an update, but I think she may have dropped off again. I talked with her earlier this morning, and she said that business is really busy right now. She has a lot of showings in Los Altos. A lot of businesses are being purchased right now, a lot of sale, a lot of interest. So we'll look forward to an update from her. I think we're going to just having Lonnie on today, I think, and then we'll continue to add more updates, and we'll add these to our videos going forward. So we'll have more videos available on Facebook and on YouTube from our little clips of updates from our speakers that joined us in 2020. I think we will call that it for us today. So thank you everyone who joined, and thank you again to Lonnie for joining and giving us that update. And we will continue to provide more updates as we get them. All right. Thank you, everyone. Have a great day.